So now welcome back. Quick, let's discuss how you can trade with key zones. For you to be successful in trading, you have to know the key zones. You have to know where the zones that the market will come back to, or the zones that the market will approach next when they move up. You can just come to the market and draw lines, or you can just come to the market and enter trade with just a single candle, or with just, or maybe being in 1 minute and you try to take a trade just by using 1 minute. No, you have to make sure you mark out your key zones, and then you move down to your smaller time frame for you to really know how to take your entry. From there, your RR using this approach will be a bit bigger. Instead of 1 to 1, you can as well capitalize on that move. That from that 1 to 1 you can easily make 1 to 10 RR. So this is so important for you to use key zones to make sure you approach the market. So let's get to the chart. Let me show you what I mean by that. So here we are again. Turn on notification bell for more tutorial videos to come. So here I'm on my M15 chart. First, let us mark our highs and lows. So we have to mark our higher highs and our higher lows. So right here, at least we need that high that has been tested several times before it got broken. That shows us that the market is in a strong trend. So this very high right here has gotten 2 touches before the breakout of this high. So that is why I marked this side. You can see 1 touch right there, and the second touch is right there. That is the second touch. First touch, second touch, third touch. Almost 4 times this high tested, 4 good times before it got broken by this high. So at it got broken by that high, what we should do now is for us to make sure we mark our zones like this. So once the high got broken, you have to start from the wicks. Like, you start from the wicks to mark. Start from the wicks right here to mark your zones. Start from the wicks to mark your zones. Like this. You mark your zones like this. So once you're done marking your zones, is for you to wait for the market to come into that zone before you can make any entry. Once the market come into this zone, you have to move down to a smaller time frame and you look for an entry. So this very candle right here, as for me, is very important. This very candle that really takes out those high right here is very important. If there was no candle that takes out liquidity, or that lead to consider, because with this very candle right here, if you should move down to a smaller time frame, you will see that this candle lead to a lot of commotions in these zones, as in it lead to a lot of consolidations on a smaller time frame in these zones. So if you go to a smaller time frame, you can mark this very candle out. If there was no candle, then I'll go with these zones at the highs, 1, 2, 3. So I'll go with those zones. If not, I'll try to indicate this candle in a smaller time frame, and I'll wait there to look if I'll see any entry criteria on my smaller time frame for me to take a trade to the upside. So right here, I'm going to go to my, it may be 5 minutes for me to take a trade, it may be 3 minutes, it depends on what you want. So I will go for 5 minutes because I don't want this tutorial video to be too long. So don't forget to subscribe guys. So right here, I'm on my 5 minutes, and here was the zone which I marked. Here was the zone that I marked. So the market came into this zone like here. Here is the candle that lead to commotions on this zone. So because of that, I mark it out. When I mark it out, I would like a candle to come inside it. When it comes inside it, I would like it to give me a shift in market structure for me to take a trade to the downside, so to the upside, sorry, because it was a buy trade. So what happened is there was a trend right here. There was a trend, but this candle, if I zoom, let me zoom because there's a candle here, so let me zoom. If that candle really, okay, yeah, if I zoom, let me remove this very, okay. So zooming to that very candle there, we've seen that that very candle lead to that zone. Yes, this very candle right there lead to that zone. So you have to place your trade, because as the candle come into this zone, we can easily saw there was a shift. There was a shift in market structure right there. So you have to go back to the root of where it was coming from. So you pick your tool, you place your trade right there, and your stop loss has to go below that zone. So once that happen, you target your 1 to 2 or 1 to 5, and you've gotten your 1 to 5 right there. So right away we have another zones right here. You can see there's another zones right here. We have 1, we have 2, we have 3 touches, because 1 2 3, because before it finally breaks and close above it. Close above it. Then, like I said, we mark our zone from the high, we scale it down to the future. But let me go to M15, which is the bigger time frame, to see how the market come into this zone. Sorry. So let's move to M15 and see how the market came into the zone. So let's scale it to the future. You can see this very one here, this very leg here. This is why you should always wait for a confirmation before you take any trade. You can see this leg, at it come, it pierce through this zone. Then if you go to 5 minutes, you should go to your 5 minutes and look for a shift in market structure for you to take a trade from this zone. So let's go to 5 minutes. If there was a shift in market structure for you to take a trade, if there was none, then we let it go, because that zone won't be valid. Once there is a break of structure to the direction of the trend we're expecting the market to go, that is the only time we can take a trade. So let's go to M5 to check if there was a shift in market structure during the breaks of that zone to the downside, because the market literally grab liquidity to the downside, thereby telling us, oh, we can have an entry if possible. So let's turn our chart to the line chart. You can see something, there was a leg here, and it created liquidity up here. It created liquidity up there, and it breaks structure to the upside. So there are people who can easily take this trade, and there are some people who can easily take according to these very zones that the market created at the up again, because it creates this very high and break structure to the upside. That is, if you are not okay with this very one, based on structure wise, if you are not okay with it, you can look for another entry, another scenario. But if you are okay with that, you can as well see take a trade right there. You can as well take a trade by right there. But when it comes to your RR, whenever you are taking a trade, you should consider your RR. Check the upside. If it won't be up to 1 to 5, you let that trade be, because you're safe. For you to be safe in this market is better than trying to trade every single thing that comes your way. So let's check. You can see it's not even up to 5. This is 1 to 1.5, and you don't want to be taking this kind of trade for your capital, because you come here to make profit, not to contribute to the market makers or to the brokerage. So for that, I would like to go with this second scenario. So you can see this second one created this zone. It created this very zone right here, created this very zone, this one, and it broke structure to the upside, leaving you with candle here. So you can easily place your trade right there, and your stop loss come a bit below that zone. You can target 1 to 3 or 1 to 5. 1 to 3 or 1 to 5. You can see you've made your 1 to 5 right there. So that is the beauty of you trying to take a trade that is far better. Targeting the high, giving you 1 to 6.6. So that just happened today. This is what happened today when that was during London section, London Open. So this is what happened today. So you should try your best to make sure you align your trading with key zones in the trading. Key zones. You have to make sure you have key zones. Mark out your key zones. Then move down to a smaller time frame and look for a shift in market structure or a candlestick scenario for you to take your trade to the opposite direction. As for me, I really like it when I go with a shift in market structure instead of a candlestick scenario. If I'm to use a candlestick, it's still okay. It's not that it's not working, but when it comes to trading field, there is nothing that's 100%. It's not a 100% warranty. So you can just pick one of the strategy I've been dropping on this channel, pick one, backtest it to your own advantage, and you use it. So subscribe to this channel, turn on notification bell for more tutorial videos like this to come as I sign out.